Finding the best locations. This is always good. You know, when you start looking at really at the macro level across the United States, you really care about job growth, the population trends. Right here to the far right, you'll see just kind of showing the change in population between 2010 and 2020. You can see a lot of the obvious spots. In Texas, you got Houston, Austin, and Dallas. Then across to Florida, you can see Orlando's pretty dark blue there, the upper panhandle of Florida, kind of going across from the Pensacola to Baldwin County, lower Alabama, that area. Then you go up to Georgia, you got Atlanta, Nashville there in Tennessee, Charlotte. And so you got areas where you can see kind of, we all know, we've all hear these names, these cities where they just kind of been extreme growth that's been happening the last few years. A lot of the movement that happened during COVID has really kind of amplified, I think, in a lot of these same areas as well too. So you definitely want to follow the jobs, the population trends, because if more people are coming there for jobs, they're going to have, especially with now, depending on the type of jobs, they're going to have more money to pay, more discretionary income. And so you're going to do good from a rental perspective if you have a quality product in that area. Amenities and potential value adds. I love value add. I'm a value add investor, whereas that now we can go in and force appreciation by adding value. With the apartments that the 76 units we have in Montgomery and the 20 units that we have on the contract, the goal for those right now, we're averaging about $275 rent increase in those apartments. And that's an average of about only half of the complex being updated. And the other half, we were able to increase the rents $200 without doing any renovation, just because the previous owner hadn't increased rents in an extremely long time, just because it was in part of one of those low income tax credit programs. And so they're going in by having that understanding, knowing what the market rent was. We knew it was like, hey, we can get this and we don't even have to do renovation and put $6,000, $7,000 a door in here, that we can just raise it $200 for half the complex, take 18 months and update the other half of the complex, and let's go ahead and refinance and boom, and cash out and be done and just hold it for the long term. And so that's the thing you have to know and look at the different strategies. By understanding your market allows you to move with speed and allows you to hedge your risk and the amount of money, the capital that you need up front, whereas you don't have to actually go in and buy and completely renovate all the units now, because that would have cost us at least another $300,000 that we would have to have up front if we were going to renovate the entire complex, and it was going to take us longer. But crime rate, we talked about already. We don't like crime. We kind of stay out of those areas. That's my preference, but there's money to be made in those areas. But a lot of times you have to be more hands-on. And there's a lot of, with the turnover, just understand going in that you need to buy at the right price. And you may be able to get a lot of cash flow, but there probably won't be a lot of appreciation long-term in those areas. And so that's the thing we just got to realize, that there's always trade-offs with what we're doing. And proximity, what's close by. One of the things that I really loved about the property that we picked up last year was that Publix and Starbucks was like less than 1.5 miles away. And so, the area, and I looked at that, we're in the B class area, that's right down the street. It was like, okay, we can't go wrong, because those companies, they look at a lot of data. They pay a lot of money to do analysis before they put a retail store in those areas, that they're doing a lot of investigation and a lot of analysis before they make a commitment to build in those areas or to buy and lease a location. Finding the best location, here's some resources. We're not going to dive into those, but there's a lot of online resources, LoopNet, Zillow, CoStar, Reonomy. When you start looking to do more research and pull in data where you want to go direct to owner like we do, we're working direct. That's one of the sweet spots with being able to go 40 units and below. Because guess what? Now I can go direct to the mom and pop owner that's a baby boomer that's owned it for 20, 30 years and that's ready to retire. Now I can go direct, build rapport with them, and then work through that process and get seller financing. We've bought multifamily with 100% seller financing. We bought multifamily with traditional bank loans. We bought it with hard money. And so there's different ways to finance deals, bringing in partners on the deals in order to get the deal done. You're only limited to your creativity and being able to work to provide a win-win solution to the owner, because the owner is going to let you know, hey, what's most important to them. And once you find that out, now you can craft a win-win solution. Local government websites to kind of go through the county records. market research report. There's a lot of different organizations and businesses out here that provide research in the commercial real estate space where you can be an informed investor, where you're not out here just trying to wing it and figure it out by yourself. And then Crime Watch as well too, where you can go in and understand what's going on from a crime perspective in these areas as you're going through and you're doing your due diligence, but also as you're kind of figuring out from the get-go before you even start marketing, where do you want to be and where do you want to invest?